For years, the critics and the bears have been screaming the same tired narrative about NIO, claiming that while they make great cars with incredible technology, they are nothing more than a cash-burning machine destined for bankruptcy. But on February 5th, 2026, that argument didn't just fade away, it was officially destroyed. In a move that caught Wall Street completely off guard and left short sellers scrambling for the exits, NIO Incorporated released a profit alert for the fourth quarter of 2025 that has rewritten history. We are not talking about a prediction, a forecast, or some hopeful guidance for the future. We are talking about a preliminary financial reality, verified by the board itself. The company has confirmed that it has achieved its first ever quarterly adjusted profit, shattering the consensus that expected yet another loss. This is the moment the narrative broke. Wall Street was positioned for failure, expecting the company to bleed money as it has in the past, but NIO flipped the script entirely. They have moved from the massive, scary losses of 2024 to a substantial, undeniable profit in 2025. This is the definition of a structural shock to the market's expectations. If you were listening to the doubters who said NIO could never turn a profit, you just missed the biggest pivot point in the electric vehicle industry's history. The headline event is clear. The era of questioning NIO's survival is over, and the era of dominance has begun. This is the news that changes everything for shareholders who have held on through the volatility, proving that the vision was real and the execution is finally catching up to the hype. Let's dig deep into the numbers because what we are seeing here is not a small incremental improvement. It is a violent upward swing into profitability that is almost unheard of in the automotive sector. The shift from burning cash to harvesting profit is massive, and the figures are staggering. NIO expects an adjusted operating profit, non-GAAP, ranging between 700 million RMB and 1.2 billion RMB, which translates to approximately 100 million to 172 million US dollars. But it gets even better because even under the strictest GAAP measures, NIO expects a profit from operations between 200 million renminbi and 700 million renminbi, or about 29 million to 100 million US dollars. To understand the magnitude of this achievement, you have to look at where they were just 12 months ago. In the fourth quarter of 2024, the company recorded a devastating adjusted loss of roughly 5.5 billion RMB, or about 793 million US dollars. Think about that for a second. In just one single year, NIO has swung its operational performance by nearly 6.7 billion RMB, which is approximately 950 million US dollars. This is a nearly $1 billion turnaround in operational efficiency and profit generation in just 4 quarters. This financial turnaround proves that the business model isn't just scalable, it is now printing money. The bears who focused on the 2024 losses are now looking at a 2025 balance sheet that is clean, strong, and profitable. This is the kind of financial pivot that creates legends in the stock market, transforming a company from a speculative bet into a fundamental powerhouse. The data is irrefutable, the swing is historic, and the profitability is real. You might be asking yourself, how did they pull this off? This profit was not an accident or a fluke. It was the result of the holy trinity of growth that has come together perfectly to create this perfect storm. The press release explicitly identifies 3 specific drivers that prove the business model works at massive scale. First, we saw explosive volume growth with deliveries surging in Q4 2025, reaching approximately 125,000 units. This means the heavy fixed costs of their state-of-the-art factories and massive R&D spending are finally being spread over a much larger number of vehicles, unlocking massive operating leverage. Second, we are seeing product mix optimization. NIO isn't just selling more cars, they are selling the right cars. High-margin models that drive significantly more profit to the bottom line. Third, and perhaps most importantly, is the relentless operational discipline. The cash burn era is officially dead. Comprehensive cost reduction efforts and efficiency improvements have taken hold, allowing every dollar of new revenue to drop directly to the bottom line. But that's not all. While critics were obsessing over the balance sheet, NIO spent years building a moat that competitors simply cannot replicate overnight. The battery swap network, which ignorant analysts once called a capital drain, has revealed itself to be a massive competitive moat and a unique selling point that no other EV maker possesses. Combined with a brand portfolio that now covers every major segment, from the premium NIO brand to the family-oriented ONVO and the entry luxury Firefly, NIO has effectively cornered the market. This unique user enterprise model continues to drive insane loyalty and repeat sales, creating an ecosystem that feeds itself. The market reaction tells you everything you need to know about what comes next, and it confirms that NIO has entered a massive re-rating cycle. On the day this news broke, we saw a massive divergence that signals a paradigm shift. While the broader markets like the S&P 500 and the Dow Jones fell by about 1.2%, NIO stock defied gravity and surged, signaling a specific targeted repricing of the company's value by institutional investors. The valuation framework is shifting right before our eyes. NIO is no longer being priced as a risky startup that might survive the EV wars. It is now being priced as a platform company that has entered its harvest phase. The risk of bankruptcy or endless dilution has effectively vanished with this report. This profit alert is the green light that big institutions and smart money were waiting for to pile back in. Think about it. They achieved profitability before the full rollout of their biggest future catalysts, like global international expansion and high-margin software monetization. If they are profitable now, imagine the upside potential for 2026 and 2027. This isn't just a good quarter, it's the signal that the company has matured from a cash-burning startup into a profit-generating giant. For investors, the bottom line is clear. The fundamental risk is gone, the execution is proven, and the sky is the limit. The bear case is dead, the bull run is on, and NIO has just proven that the impossible is actually just the beginning. In my opinion, this profit alert is that NIO has successfully transitioned from a high-risk venture stage to a sustainable industrial scale, effectively silencing structural solvency concerns. The most critical takeaway is the massive 6.7 billion RMB swing in operational performance within just 12 months. This proves that NIO's heavy upfront investments in proprietary technology and a diverse brand portfolio, including the premium NIO, family-focused ONVO, and entry luxury Firefly lines, are finally yielding significant operating leverage. By achieving an expected adjusted profit of up to 1.2 billion RMB while the broader market faced headwinds, NIO has demonstrated that its user enterprise model and unique battery swap infrastructure have evolved from capital-intensive experiments into a formidable competitive moat that competitors cannot easily replicate. This milestone is not just a statistical anomaly, it is a fundamental shift in the company's financial DNA, driven by optimized vehicle margins and a disciplined reduction in operational overhead. For investors, this represents a green light scenario where the primary risk of endless dilution has been replaced by a clear path to self-funded growth. The fact that this profitability was achieved before the full monetization of its software-as-a-service platforms or its broad international expansion suggests that we are witnessing the very beginning of a multi-year valuation re-rating. NIO has effectively broken the perpetual loss narrative and is now positioned as a dominant platform player in the global smart electric vehicle market.